And we are live. What's going on, everybody? Welcome to Wolf. Welcome to another podcast. Today, we're diving into the future of crypto protection with the team from Fairside, building decentralized coverage to safeguard users from theft, hacks, and all the chaos of Web3. I'm really excited to be chatting with Drew and Brandon here on the team to talk about all things going on in this world. It is a crazy time to be alive in this industry. So it's great to have you. Brandon, how's it going?
Good. Thanks. Appreciate you having us.
Absolutely.
Good to be back.
Drew?
Good,
yeah,
dude.
man.
Good to be back.
Absolutely. Well, listen, for people who are unaware, they're not as deeply ingrained into the crypto world, explain to them a little bit why it matters to have this crypto theft coverage, what you guys are actually doing specifically in the industry, and we'll kind of crack it open from there. We'll start it off broad, and we'll dive a bit deeper into the products and everything that you guys offer.
Yeah, of course. So we're wallet theft coverage. So this is the first of its kind offering. We really tried to tailor this for the retail user, like for the masses. And so the product at its core is very simple for the user side. You choose the amount of coverage you want, and you pay your transaction fee and your membership fee, and you have coverage for that wallet. But not only that wallet, you get to choose up to 9 other wallets that you want to have covered as well. And we cover all EVM chains, well, the vast majority of EVM chains, Solana and Bitcoin. And ultimately, you're getting blanket coverage across your assets. So as assets move in and out of your wallet, you're covered up to the cover amount for things like phishing attacks and social engineering and malware and all these events that actually are the threat to you holding your crypto in a self-custody position. So we find it to be an extremely valuable product in the space, more of an essential line of coverage that is necessary for anyone to really move forward into Web3. And then to also onboard new users into Web3, this is a critical infrastructure piece. And so we expect it to be embedded into wallets and DEXs and all your favorite projects across the ecosystem very soon. So, and we are live now, so you can actually come in to our website, fairside.io, go to the DApp, connect your wallet, and you can buy cover in less than 30 seconds.
Wow. Okay, cool. Very nice. Drew, was there anything you wanted to add to that kind of breakdown, or do you think you covered it pretty well?
No, that was great.
Perfect. Right on.
I nailed it.
Okay. You nailed it. So here's like my follow-up question that comes to mind. So who are the competition? What are they offering? And what does that landscape, I guess, look like for you guys?
You know, right now, this line of coverage is sort of a blue ocean in crypto. No one has really attacked the wallet sector. And like I said previously, like we really look at it as like that critical infrastructure. Wallets, you have to have a wallet. You really should be holding your assets in a self-custody position in a wallet and not on exchanges. Of course, people use exchanges and I use them myself, but it's more on and then try to get off and then bring them back to a safety position. But in that safety position is this self-custody wallet, right? But the problem there is that you start to connect and start to interact with different projects in crypto, and then you start to have other vulnerabilities that can threaten your crypto. So you can click on the wrong link. And so these are the things that we've really focused on, is to attack that threat vector that no one has really attached. And we look at it as, you know, it feeds all of crypto, like this type of product. And so it's not specifically associated to one type of project or one type of niche like smart contracts. It's you holding your crypto, which vast majority of people do, and they're all vulnerable to the same attacks. So in that sense, we don't really have any competition, especially in the way in which we did it. We really went after the masses of crypto. So this isn't institutional coverage. It's not coverage for exchanges or coverage for smart contract failures. This is coverage for the everyday person who holds assets in a self-custody position. That's what we cover. Now, there are other DeFi insurance projects that have gone after smart contract cover, have gone after stablecoin depegging or slashing coverage, or exchange failures, things like this. Those are more niche in each one of them, and you buy coverage specifically for that exchange or that project. We're much more comprehensive and broad brush stroke of the type of coverage we offer, meaning that when you buy a membership to Fairside, all the assets that you have in your wallet that have a tradable value are covered up to the limit you chose. And so that kind of coverage has never been offered before in the space to an individual at this level.
The only thing I'll add is like Rand said, we don't really have competitors. We just kind of have complementary products out there. I think if you're trying to really like take care of yourself in this space and do it right, we are part of, various products that you really should be using, like, transaction simulation software like Kerberos or, Wallet Guard that's being integrated into MetaMask right now, Revoke Cash for approvals, things like that. And we just are, kind of part of that protection stack that people should be using in order to really guarantee that, one, you're able to kind of catch these things before they happen. And two, if you don't, you do have a backstop, and that's us.
Yeah. And those security tools that Drew mentioned, those are preemptive. And in the event that they fail, they're preventative. And in the event that they fail, we're the preemptive thing that you actually do in advance, and it creates that safety net for you. So we expect and promote and push everyone to use these security tools. But in the event something goes wrong, we have coverage available for you. Now, not mandated that you use them, but we strongly suggest people use them, and obviously creates a more secure ecosystem for everyone.
Even with those tools, there's no 0% risk, and that is why we exist.
Definitely. What would you liken it to? Any analogies that come to mind for like life? My brain automatically goes to driving a car without insurance or something like that. Are there any other visual analogies that come to mind for people, just to paint a more of a visual picture for them?
Yeah, I mean, you don't get buy a car and then drive it off the lot without insurance. Now, right. if you have, let's just say, a home and it's the bank, there's no bank involved, you've paid off the home, you don't have an obligation to cover that house, right? I mean, for fire or wind or anything, you don't have to. But the reality is you probably will, because it's a valuable asset to you. And I argue that crypto is probably the most valuable asset that our community owns today, and into the future it will continue to be. And to not cover it seems to be like not the greatest idea. And now if this was a month ago, then you didn't have an option. But today, Fairside does exist and has launched, and coverage is live. And now no more excuses. You can cover the most valuable asset you own.
Amazing. And, you guys brought up a few different companies that are not your competition, but rather complementary assets for building your security stack so that you're not getting wrecked out here 24/7. You mentioned a couple, and you guys have some partnerships cooking that you can't talk about yet, but there is one that you did have recently that was big deal. I was stoked about it personally. I've used Revoke Cash many times, and I needed it, especially during NFT season. There was many times where they're like, okay, guys, that site was compromised. Go to Revoke Cash immediately. And all the big guys, like the Zach XBTs out there, all the people who, all the main KOL influencers, the people who are very well known in the industry, all kind of repped Revoke Cash, just because you go in, it's very simple, it's easy, and boom, you're covered, you're safe. So talk to me a little bit about this partnership, how it came to be, and what it offers for people.
Yeah, sure. We, we've known Roscoe for a long time. We've all used Revoke Cash. We know plenty of people that have, basically experienced trains from forgetting that they've have had approvals set for, matter of months, if not years. And, it's one of the most, if not the most used app, I believe, on entire Ethereum network right now. If people don't know, like, Revoke Cash, you should absolutely go check it out. It's revoke.cash. And we have directly integrated into it. So there's a few tabs when you come to Revoke itself that allow you to access, the approvals you have and revoke them. And we are now a third tab that is under coverage. So you can go to Revoke and you can sign up for our coverage directly through the interface. It's integrated natively. And that is the first of, a few big partnerships that we'll be rolling out as we look to integrate directly into these products natively. So people don't have to go to our DApp in order to sign up for coverage. You can just go to dApps that you use frequently and you can get coverage through them.
Awesome. Brandon, was there anything you wanted to add to that sort of description on the Revoke partnership?
No, I mean, I think the Revoke, Drew said it well. Revoke has been a great partnership. it's very well known. People trust it. They do great things. Their whole mission, right, is to protect the space. That's why our partnership made so much sense with Roscoe, for him and us as well.
Yeah.
Drew mentioned, getting the integrations like that, talking about like where we're going to kind of be. This is one of the first of a few big partnerships that will be announced. I mean, really, the reality is we want to live in the space where people interact. It's going to be so nice. You can think of it like the travel insurance experience, right? Where you just go and you get your plane ticket, and then there's a button that pops up. It's like, hey, do you want to get travel insurance for this? Yeah. Just imagine being in your favorite wallet, and then pop up says, hey, would you like to get coverage on all of your assets? And then like, yes, so you click yes, and then you're just part of that process now. And now it's sort of a set it and forget it mentality. You don't have to do much more. You now have coverage for all of the assets in your wallet, regardless of what they are, right? They kind of come and go, all the tradable value. And then you get the option to choose 9 more wallets that you want to add. So I might add, if I signed up from an EVM chain, I might add my Solana wallet. I might add, another wallet from a different chain. So a Bitcoin wallet, like you can add any wallet that you want, which is, I think, a huge advantage and benefit to the community. So I think it's going to,
it's an important note to make right there too, because I think people get confused with this sometimes. Like our product is live on Abstract, but that does not mean that our coverage is exclusive to Abstract. And you can sign up like through other chains as well. You can pay your premium through other chains. So you don't have to just bridge to Abstract to do that. Yeah. And when you sign up for coverage, you're able to add 9 different wallets from any of the associated platforms that we cover. And there's a lot of platforms that we cover. So again, it's just not exclusive to the EVM. It's not exclusive to Solana, not exclusive to the Bitcoin network. You can add all of your associated wallets to your singular membership on Fairside. So again, you don't have to sign up for one membership per wallet you want to cover, which is kind of the issue with these other insurance platforms where you're only able to sign up for, one singular event that they cover. And then if you want to cover additional events, you have to continue to pay for memberships for those different platforms that you want to cover. And so we're trying to make it a lot more, exclusive than those. So there's not just, one wallet, because that obviously would not be adhering to good wallet hygiene. People should absolutely be splitting up their assets across multiple wallets, even on the same chain. Like I don't just use one wallet for the Ethereum network. I have obviously one account and I have many different wallets. I have multiple accounts and I have many different wallets throughout those. So, we really think it's important to adhere to good hygiene. And if we didn't have it set up like that, we would be forcing people to hold a lot of assets in one wallet. And that's how you end up getting drained for a lot in one swing.
Yeah. In a big advantage, like something that we kind of skipped over on that, Drew talked about like the security side of it and like being able to like have good wallet hygiene. But the other side of it is making sure that we have a really, really clean and easy user experience. So we integrated other chains for people to sign up on, because we want you to sign up on whatever chain you're most comfortable with and what is maybe your favorite chain, whatever it is. We want you to be able to sign up there. And so we integrated that into our process. Not only on Abstract, but on other EVMs, right? And the reason was we need a clean user experience. Web 2 is really good at user experience. Web 3 isn't the best yet, to say the least, right? And so we really tried to mimic as much of Web 2 like feeling and user experience for the end user. So, I mean, I don't know how many times you guys have ever gone to a DApp or something and the process is clunky and whatever. And then you're just like, no, I'll come back to this. And you never come back, right? You never come back. You never do. You don't have time for it, or it pissed you off. So you moved on. We didn't want any of that. So that's why, our whole goal was to get under a minute for a sign up process, which we accomplished. And that was a big deal for us. So Web3 is great for other things, transparency, which is amazing for the claims process. Onboarding, having this community to onboard new users is amazing. So there's some things that we can do better in Web3, and there's some things that we should still take from Web2, which I think that was our goal, was to make this super clean.
There's actually some other things we're doing too that makes the sign up process a little bit more accessible as well, or adding, how do I put this? Like, so we're also doing multi-asset sign up. So like, let's say, you have an altcoin that you've been holding for a long time that's become depressed in value, and there's still some liquidity, but you don't feel like, there's ever going to be much volume left. You can use that to pay for our coverage as well. Some altcoin that's just basically dust that's, just been sitting in your wallet for a while. Our coverage is pretty cheap. It's, 1.95%. So you're really paying, like $190, $195 for $10,000 in coverage, and you don't want to use your ETH to do that. Just use some altcoin that you haven't touched in forever, and actually, have that work for you instead of just sitting there in the graveyard of, all of your shit coins that will kind of forever clutter your wallet.
It's a good point though just to bring up the cover amount, like the cost, right? 1.95. If you think about it, it's like 50 cents a day. Right, to cover your assets for just $10,000 of coverage. If you were to choose the amount of $10,000 in coverage, it's 50 cents a day. I mean, think about the things that cost 50 cents a day, right? We were brainstorming the other day, just talking about it. Like, it's like a gumball at the airport. You're like in one of those machines, We're like, oh my god, you buy a gumball a day and you got coverage for your wallet.
Sounds a little bit silly when you put it that way. 50 cents a day.
Yeah, right. Crazy. Why wouldn't you pay for it? You know what I mean? I think people think like the price of this is going to be restrictive. It's going to be high, but it's really not, especially when you break it down. Like, I bought a coffee the other day. It cost me $5 and I couldn't believe it, and I do that like without even thinking about it. Like, I don't even look at the amount of money I'm charged for shit these days because it's all just so expensive, right?
Threw away $10, 10 days of cover, Drew.
Yeah, exactly. So like, why wouldn't you pay just for the peace of mind in case you get drained? Because I certainly do care about losing $10,000, but I don't care about 56 cents every day. And if you do, then I mean, I don't know, your priorities are twisted.
Yeah, I definitely hear you there. What are some like with you mentioned a few minutes ago with the traditional finance, some of the things that they offer a bit more clunky, just different style compared to the way you guys are doing it. You guys are obviously trying to go in a more decentralized, community-driven routes, and eventually we'll talk about the Fair Token as well and how that all works and how people are all contributing and therefore able to do more coverage. And I think that aspect is really, we'll dive a bit more into that for people who don't exactly know what that means. But talk to me a little bit about the main differences here between that traditional insurance and what you guys are trying to do.
Well, I mean, traditional insurance, when you sign up, you typically, I mean, there's online methods, right, where you can sign up online. But typically you're going through an agent or a broker. You're providing all of your information. They're coming out physically underwriting your home, running your driving report, and looking at how many points you have on your driver record. They look at your credit history. They're doing all these things. And then it takes a few days typically to go through that process, especially if you're doing like a larger asset like a home. Oftentimes they want to see the condition of the home and things like that. This is streamlined to where you come into the system and you remain anonymous when you sign up, and you're able to get coverage. Like we talked about, in under a minute, you have coverage and you remain anonymous. Where we do is the claim side, is where we get a little bit more deeper diving, I would say. And that's because this line of coverage potentially has more fraud in it than a smart contract cover, for example. So if you have a smart contract cover and that's what you're offering, then it's easy to see that the 1,000 people that are affected by one particular event are all unrelated users, and this is not insurance fraud, right? So very easy. You can remain anonymous in that system from start to finish typically, but even the big ones, you're not even like, I think to be token holders, you have to KYC and all that stuff. But in our system, you remain anonymous all the way to the point you make a claim. Then once you make the claim, you perform KYC, and then you go through our investigation process. But our investigation process actually is even much faster than a typical claims traditionally. So we can settle a claim in most all cases in under 7 days. And that's because, there is an investigation, you do the KYC, and the timing of how quickly we can settle that claim is pretty much on the user. How fast does the user go through the process with us? Because we're there waiting to process the claim. It's more about the user gathering the information that we request and then going through the process. But overall, the start to finish, the amount of time you spend in the insurance sign up and in the claims process, I would say is at least 95% less than what you do in the traditional space. That's how fast we sign up, and our claims are far more efficient.
To that point, I think, another thing along with kind of like the misconception that people will have naturally about the price of this product is also like the misconception that they have about what is the amount of time and kind of what's the lift in order to actually file a claim and have that investigated. And to that point, we have been doing these retroactive claim campaigns in order to show people what the process is and post testimonials for the users that have basically submitted these loss events they've experienced in the past before we launched, that we've investigated and actually retroactively paid out claims for. So if you were to go to our X account, Fairside Network, you can see some of these testimonials that we started posting, that we like gathered feedback from those users that have gone through the process, which has ended up being a lot easier than I think they expected it to be, a lot less time consuming. So that's something as well. It's just important to touch on is, like the claims investigation side of it, the claims submittal side of it, it's a lot easier than you would expect. And, like Brandon's saying, with traditional insurance, it can take, up to a month in time, sometimes more, depending on what kind of claim you're filing for what kind of insurance. Ours, it can take, really a day and you can get paid out.
Wow. Yeah, that's wild stuff. I want to pull this up as well. So let's jump over to this because I want to find out some more information about this retroactive campaign that you guys had going on here. But let me know if you can see my screen. This is the Fairside X account, which, by the way, people can give a follow to right now. I actually just posted the stream. And by the way, if you guys want to sign up, if you're in the stream on X, just pop on over to this link right here. It'll take you to all the things that you need. And so anyways, this is their page. Was any of the testimonials here like pretty high up in the most recent tweets, or do we have to scroll down a little bit?
It should be there, a few down. Look for the one with a doggy daddy sitting in a room with a silhouette of an owl.
Of an owl? Is this it? Is this it right here?
Let's see here. Yeah, that's it right there. Yep.
All right. I like this. This is cool. Oh, I see. Okay, now I get this.
Yeah, so the whole point is basically to tell the story from the perspective of the user that got drained, how they got drained, and then their experience with going through the claims process with us.
Wow, very nice.
And then they get money back, right?
Yeah,
so
there you go.
Yeah, the user who didn't have coverage, basically for events prior to us going live, can tell their story, go through the investigation process, validate how the process works, and see how easy it is to make a claim and painless it can be. And then they tell their story, and ultimately they get paid. They get paid some, not the full payout, right? They get something paid back. But I think it's a good step in the right direction to just get people through this process. And we've learned a lot from it too, right? And so you can kind of think of it like a soft claims launch, right? Like, which is hard to do. Like you just launch and then you just get claims and you try to learn through the process. But we've been able to do this, 15, 20 times now in real life examples and hone our process a little bit better, which is really going to help everyone in the long run. So.
Yeah. And for people who are like, okay, cool, makes sense, understood, and they're thinking, where does the money come from? They're like, you pay a little bit of money, the coverage somehow goes to $10,000 or up to $10,000 or whatever the number is. And they're like, okay, where is this money coming from? How do I know this is sustainable if I'm going to be contributing for a year? And then on, day 360, everything goes wrong and I get wrecked. Then I need to get this coverage and then they're worried about the money. They want to make sure it's going to actually be covered. How do you kind of go about explaining that?
Well, so you're saying like, how does the insurance side of it work?
Yeah.
So it works very similar to the traditional insurance systems. And so, our real innovation wasn't saying, hey, we want to offer wallet coverage. The innovation was taking the traditional insurance systems resiliency and economic model on chain. That's never been accomplished. And that was really what we spent the last couple of years doing before we launched the product, was making sure that we could match and mimic that capital efficiency that they have, but ultimately also to have an actuarial model sit over top of it. And so anything, if we were talking about home insurance or auto insurance or whatever, it is all run by actuarial models and probability, right, of loss. And then they have a premium that charge for that. But what people don't understand, and it's in large part by the way insurance in the space has been kind of deemed to be done through the competitors and stuff. We really focus on a risk-based capital, which is like a float amount of capital, and then premium. How insurance companies work is that premium comes in the door and then they pay losses out against that premium. So when you have a loss ratio, it's how much premium did I bring in? How much loss did I pay out? What's the ratio? If I'm under 1, right, then I have brought in enough premium to cover all the losses and pay my expenses and things like that. So we are just, our goal is, and our aim is to manage the loss ratio similar to how traditional insurance companies, dollar comes in, we automatically reserve a certain percentage of that dollar to pay claims. The money that's sitting on the sidelines actually is just float. It's extra. It's actually not meant to be used ever for a claims payout. And if you do need to dive into it, you have it there, but you're likely to annualize all the premiums that you would have over the year and then have the proper amount of dollars. So if you have a frequency or severity higher than you expected earlier in an annual period, well, then you have the float to pick that up because you have higher frequency or severity of claims. But then as you run out the rest of the year, it all evens back out and the same dollars would be there. At the end of, if you do a great job with your actuarial modeling, then what you end up having is underwriting profits. So then there should be a larger fund of money to start the next year than you started with. And that's how we manage it, just like a very traditional insurance company would. Although we're not, a traditional insurance company, we would monitor it the same way and manage that same process just to make sure we have the same economic stability.
Very nice.
But I think less people actually care. I mean, early on, yes, it's a valid question. As we mature, no one's going to care how insurance works. No one cares how insurance works today, just because it works. You pay your premiums, you make your claims, you get paid. It's a valid question today. In probably 2 years, no one will ever ask that question again, it's a valid question because, but yeah, it's this very traditional system is how we've mimicked, because it's a 300-year-old system.
Right.
It stood the test of time economically for 300 years and is arguably one of the most strong economic models in finance. Don't change that. Don't change that. That's the best part of insurance is its economic model. It's not the user experience. Hasn't been before Fairsight, hopefully. But that is there's an adversarial thing that goes on with insurance. But no one's ever questioned the economics of it. And that's what we said, well, don't change that, change the user experience.
What do you think what's the biggest benefit of bringing it on chain for people who are not as well versed in the crypto world? And they're like, okay, bring it on chain. We get that. RWAs, people want to tokenize things. They want to bring assets on chain. What about bringing insurance on chain is the benefit? And is it more of a benefit to them, or is it more of a benefit to the companies who are building?
Well, I think it's twofold. I think what you're seeing is we're the first leap of a strong economic coverage model on chain, which I think a lot of things go on chain. Maybe we're earlier than others might be, but we're very early in that. That we believe that things will be on chain, and so why not build on chain? That's number one. But number two is that right now in the insurance world, you have it's kind of a cabal of very wealthy and gray hair old man that run the whole, run insurance. If you think about it, there's a regulatory moat around insurance. You really can't access it if you try. It's it's an effort that will be lost. And so, building on chain allows you to build a decentralized system of insurance and a decentralized distribution. And so that to me was very appealing. And instead of doing this where I mentioned the adversarial side where you've got an insurance company and then you've got the policyholder, and the insurance company pays at its own detriment on all claims, right? But if you build this as a community system where the community can participate in the actual protocol side through the token, They actually participate in that, and it becomes, then you're taking all the profits and you're taking all the economic benefit that an insurance company would typically gain from, and you're distributing it 100% back to the people. That economic benefit is all distributed back to token holders. And so that is a far different system that really can only be achieved through an on-chain system and through a tokenized protocol.
Very nice. So I wanted to ask a little bit about this FAIR token, how it's sort of used in the ecosystem. And for people who are like, okay, cool, there's a token. Is there ways to arbitrage it? Is that how I should be thinking about it? Is this a token mainly for the community? How does this work?
So the token's not publicly available yet. We're focusing on the product. But ultimately, the way the token works is the community buys the token and participates in the economic distribution of every dollar that is brought into the system. So every time someone pays $1 for a membership, the portion of that is then distributed to token holders directly. And so as a token holder, there's ways in which you can basically increase the amount that you receive from that distribution. And that happens through the amount of tokens you hold and how long you hold them. So you build a conviction score. So if I'm an average size token holder, but I've been in the system for a very long time, and someone comes in the system and buys the same amount of tokens I have, I'm going to still receive more of the economic value from the system than they do, because I've been here for 2 years and you've been here for 2 days, right? And so it incentivizes long-term holding. And then we have a unique aspect that people can take their tokens and their conviction score and mint them into a financial NFT. And then when you mint them into the financial NFT, you can sell that NFT on secondary markets. You can use it as collateral, because that conviction score, not only does it represent your time and effort and energy into the system and voting, all the things that you'll probably do, it also represents a financial piece, because if your conviction score represents 1% of the market, for example, 1% of Fairside's global conviction score, you're receiving now 1% of all the revenue that's distributed. And now you can take that and sell it. And so if I can sell my revenue stream, then it has an economic value larger than the value of the tokens, and you're receiving the economic value of your revenue stream. So not only do the tokens, appreciate in value when you have a strong economic system, but you're also able to capitalize on this revenue stream that you've been enjoying. And then now someone else buys that, and then they're able to burn that NFT and capture the same conviction score that you had now, growing their own conviction score. So I see this down the road, could actually be a pretty big market of selling and buying conviction scores, because they have an economic value to them separate from the token itself.
Very nice. Drew, was there anything you wanted to add on anything related to the FAIR token?
No, I think Brandon nailed it.
Beautiful. Right on. So I wanted to also come over to the Fairside website for people who wanted to check this out. Highly recommend it. So you guys can kind of see how this whole process is and what it looks like under the hood from all the stuff we've been chatting about. Here's their website for Fairside, and you can check out all the things they offer. Is there anything, by the way, here are some testimonials. Is there anything we should jump into on this page that you think would be healthy for the audience to see if they're watching the stream right now?
I mean, I think it's really just like kind of like these three sections right here, the events that we really cover for wallet draining, and the full spectrum coverage that we actually provide, and then the platforms like I touched on earlier. We're not just based on abstract, we're not just based on the EVM. All these platforms, we provide coverage for, and it's all included within the same membership. Wow. So, in terms of the forms of wallet draining that we cover, it's pretty comprehensive, right? And then in terms of the assets that are covered in your wallet, it's full spectrum coverage. So, it's like whatever tokens you have, including NFTs, RWAs, all the things like that you think might not be covered by us, they are covered by us. and then across all of these platforms. So what we've tried to do is just make this as inclusive as possible and not exclude really anything or any platform that people would commonly expect to be covered for this, all under one membership. And if we've tried to make the information as simple as possible, because I think with insurance, people get very overwhelmed just by the concept in general, and it's hard to kind of dive in and really understand it. But this is all pretty simple stuff, and it's all very broadly included within your coverage. There's also a calculator that you have right there that you can use to kind of like experiment with the cost per the amount of coverage you're going to be paying for before you even dive into the DAP itself. And if you want to really, really, really like get into the weeds with us, you can check out our Git book, which we've spent a lot of time on trying to make as expansive as possible. I think there's a link up within that first section, Cade, under the different forms of wallet training that we cover. If you go down to right below the testimonials, there's a link right there, the Git book. And that will provide you with as much information as you want to know, including about like kind of like all the technical documentation around how we have built our smart contracts out and all that good stuff.
Beautiful. This is awesome. Love this. Yeah, you guys can check that out on the site. Super easy to find. You guys have a few tabs here. It's related to the token as well for if you're looking to get involved. Grab that fair token when that comes out. Is there any sort of timeline on when this comes out? Any sort of intel you can give us, or is it still all under wraps? Still a bit of a mystery for everybody.
I mean, there's no real timeline for it. We just think that it's important to focus on the product instead of the token. It's that product first approach that's important. And if you see the products out there that have launched tokens successfully, they've really done it after they've built up trust in the platform itself and built up a community around it that really believes in the service they're providing. So doing the cart before the horse is a little bit of a dangerous game, right? And so that's why right now, like, although we take a lot of time to explain how the kind of like, the token model works in here under the token section, we're just really focusing on making sure that like the product works, it validates itself, and people can trust that it's going to do what we say it's going to do.
Right. Yeah, that makes sense. Yeah, I'm just checking out this whole site here. It's awesome. I love this. And by the way, I just saw it says our vision here. Why is it that you guys chose this particular part of the industry to jump in? And instead of going into meme coin territory and dropping your own meme coin, or getting involved in trading or something like that, you guys chose
to definitely over the years we thought we made the wrong decision, I can tell you that.
Yeah, no doubt. I think we've put as much resources we've gone into this product with. We could have been much more successful launching a flurry of different fucking meme coins, but the thing is like Brandon and I and the rest of the team have been in this space for a really long time. Like 2016, like we were messing around with Bitcoin way before that, before kind of we switched our careers over to work exclusively within blockchain. And I think the issue that we've all had in the space is that, so much of the work that people do is self-serving. There's not many things that are for social good. And we're trying to provide something that has real utility, something that actually can help grow the space. And consumer protection is so important within so many industries, right? They really can't exist without them. And there are very few people that have put the time and effort into trying to create consumer protection tools for our space at large. And, every day I see posts on X, or I get hit up in DMs directly from people telling me they've been drained and asking me what we can do to help. And, I think that at least like speaking for myself, this space can be very exhausting at times because of how kind of like short term so many of these products really are, and how so many of them are a dime a dozen, even when we're speaking to utility, right? People just kind of like rinse and repeat the same concepts, trying to improve on them in very kind of like marginal ways. And for us, trying to build something that can actually help people is something worth doing. And we think there's a lot of value in it too, long term. I think that it's going to take people a while to really adopt us as a essential product if they're going to be using the space, because like I said, there's no 0% like risk, like you're at some point in time, you're probably going to get drained. And it might not even be for a lot of money, but if it is, like, this is something that you absolutely should have.
Yeah.
And hopefully as time goes on, like people come to see it that way, and we can be adopted as one of those essential services that, people use, like, and people sign up directly through wallets whenever they're, basically creating a new one or onboarding new capital into the ecosystem, all of those things. And as more and more users come into the space, they're going to need services like this, because I think one of the things we think about a lot is, when like there are, when sentiment shifts and people start coming back into the space, and they start talking to their friends about it who are kind of like on the verge of joining themselves, if one of those people get drained, it's going to stop all those people from coming in themselves, right? And so there has to be some kind of safety net in order to retain the new users that are coming into the space in order to grow it together. And that's like what we're interested in. We're interested in growing the space, and we're interested in actually providing real utility that has real value for users.
Yeah, it's awesome.
It's definitely like it's been the Wild West, but even like the Wild West had Law and Order, right? Eventually come to it. And that's sort of what this kind of product represents, is that we're not trying to take away any of the opportunity for people. We're just trying to create like that essential base layer of financial protection that you kind of have to have. There is not a single industry that has ever stood the test of time without being supported by insurance products. People tend to like love to hate them, but the reality is they rebuild cities, they rebuild towns, they rebuild your homes, they rebuild. Without it, industry couldn't function because no one would take the risk, right? It's just like insurance is just diversifying a bunch of risk, right? And so no one would take the individual risk if they could buy insurance. You just would, and so now you have that option, which I think is great. You have this coverage option that we brought to the table that allows people to now have that safety net. And so it really was about the social and economic benefit of the overall good of crypto. We started on this journey long ago, iterating on how we were going to do this and how we would do it. We started in 2021, 2022, really building this thing. But the reality is it's just so important. People don't realize it because they just take like the availability of insurance traditionally for granted. Like you just go online, you go call your broker, call your agent, you just get it, right? But here you can't get it. And so now we're all suffering drains and phishing attacks and all these other things because we can't get it.
Right.
But if you can get it and you can protect yourself, that's how you onboard new users. Like, and I know people don't want to hear it, but the space can't move forward as quickly without products like this. It's just not a reality. You have to have them if you want to bring in masses. If people aren't in crypto today, it's because they're too risk adverse. You got the early adopters, right? You got the early adopters. You got like the risk on people. And when they stop treating every asset that they have in crypto, whether it's a risk on environment or whatever, when you're just kind of like out there in the wild, just leaving it all hang out there and like, okay, whatever happens, happens. But when you start treating that asset like it's extremely important to you and you start valuing the dollars that they represent, then that's when you, I believe, start to really see adoption on the product. And I think new users will see it maybe even far more than native users because they're not here yet. And it's because they're risk adverse. And so that's a user that I think is very likely to adopt a product like this. But it is for the native user. We actually built it with the native user in mind, saying, hey, you guys are here already. It's super cheap. Buy it, protect yourself, and then we're all a stronger community.
Yeah, definitely. So I'm curious here, kind of like zooming out, expanding out a little bit here for the bigger picture. I'm curious on how you guys see the space evolving, and I guess how you guys will fit into there. Is there any aspirations to inject yourself into other areas of the industry or build different products in addition to what you guys have today? Or is this something that you guys aren't thinking about right now? You're just like, let me zoom in on this right now.
Well, right now we are very hyper focused on the wallet side. We do have a vision, and we can see how Fairside could migrate into all kinds of other crypto niche products and into traditional as well. But the way I see this space evolving, eventually, I think you're going to see traditional insurance companies offer protocols cover, right? And then they're going to very strictly mandate how they manage their code, how they manage their their wallets, right? But then cover will be available. That still does zero to help the end user, like the consumer of crypto, like us four right here, does nothing to help us, because at the end of the day, we're still going to be in the exact same position where we have people trying to steal our crypto every single day. Right. Like I got an email like the other day and I was like, it was in my junk email. I was like, thank God this is in my junk email. I haven't seen it forever, but it was like, oh, we need to verify your ledger. I'm like, really, dude?
Yeah.
Like, okay.
You know who I am.
but if I had just been maybe someone who was like, you know what I mean? And just was like, oh, they need to verify my ledger. I just got this ledger. You know what I mean? And I was like, it's weird because I just bought a bunch of new ledgers. Right. So I'm like, oh, and I'm getting like emails about this now. And so it's like these threats are never going to stop. And the protocol having coverage for smart contract cover and how they handle their wallet assets, those are assets of the protocol. They're not my assets. My assets are sitting in my wallet. How do I protect those? No one is going to step up and help you in that. We are so far from traditional insurance saying, yes, let me build a product for you with that. Right. Like the Travelers of the world, like the Chubbs, they're not going to be like, oh, if they do, you're not going to be able to manage your assets the way you manage them today, which is to self-custody them, kind of meander between websites, connect and do free mints and all this other shit that we do. You're not going to be doing any of that crap if you have an insurance product that sits over top of it, because there's going to be an exclusion list longer than your coverage list. Right? If you do these things, you're not covered, and it won't be quick. Like the sign up process won't be anonymous. So those are the things I think that we really stand an advantage in what we've built. And I think that we just need to be in front of the users. This product's never existed, so people need to know it exists, which is why things like what we're doing here is great for people to understand that these products do exist and you can protect yourself now. So,
and you mentioned the 1 minute signups. So for people who are trying to get signed up, it takes a minute. There's no KYC required at sign-up day. It's only when they're like, okay, I need to file a claim now. Now I have to go through the whole process, right? Or how does that process work from people who are like, okay, cool, I want to sign up. I'm ready to go today.
Yeah, that's right. Sign up. You're ready to go. You're covered if you need to make a claim. And so what we did is we really narrowed down the amount of people that would ever have to KYC. You have to KYC at the time of claim. By narrowing that down, the vast majority, right, it should be let's call it 99 out of 100 don't have to make a claim. Right. And so the one that does, he has to KYC or she has to KYC. But the reality is, and I strongly believe this, if you've lost everything and you have to KYC to get it back, and we don't keep your KYC, this is a third party provider. We just want to know that you've KYC'd, then we verify you on a call like this. Right. But if you've lost everything and your KYC, I mean, because we've KYC'd in so many different ways, like on ramps and all this other stuff, like you're not really anonymous anymore. Like there's a few people that probably are, but very, very few, right? I still have to get off on Coinbase and stuff. You know what I mean? If I want to get assets out of here, right? I'm not some, wizard. I don't know how to get out of my KYC on Coinbase. And so I do these things. And if I had to KYC and go through a short investigation process in order to get back everything I lost, I would do that in a second. And I think the vast majority of people would. Now, you can say you wouldn't until you've lost your money. But if you've ever had someone steal your assets and someone said, just verify who you are and tell this really smart investigator what you did, and he'll validate what you did, and then we'll pay you back. And then you're like, yeah, that makes a lot of sense to me. When you break it down that way, it's like KYC is not that big of a problem, especially when we're not advertising it and we don't keep it. Yeah, I mean, you've KYC'd somewhere in the space before. Most people have.
Definitely. I agree with that. Well, listen, I was going to say, so I was going to turn it over to Brandon and then back over to, Drew, and then back over to Brandon here on any final things you guys wanted to leave with the audience, or if there's anything coming up that you wanted to allude to, any other, you guys had that retroactive drain campaign. Is that something that's going to be happening, more in the future, or things like that of the sort? Anything you guys that comes to mind? Would love to hear about it before we wrap.
Yeah, I mean, just go check us out on X and check out our website, check out the Git book, learn about Fairside for yourself. We will be doing more retroactive drain campaigns. What we'll be doing is for every larger product that we integrate with. So we will be doing a retroactive drain campaign for their audience specifically to kind of like help onboard them into Fairside just through learning more about how the claims work, also getting a chance to, get paid for a loss that you've suffered prior to us launching. And this is why this is the second one that we've done with Revoke, and that was basically sponsored by Revoke. So any users of Revoke who went through Revoke to Fairside were able to sign up for this retroactive drain campaign. So that would be accompanying any large integration that we do in the future, and there are more coming down the road that we'll be launching soon with. So I just say keep an eye on us and check out the product. Also, feel free to message us with any questions you have. Like, we're very available people, and we love getting questions and, kind of talking people through their concerns about the product.
Cool.
Yeah.
Brandon, over to you.
It'd be more of the same. I would just encourage anyone to go to the website and to connect to the app, check it out, give us any feedback you have. Love to hear it, but it's super fast, super easy, and very inexpensive for what you get. I would encourage everyone to go check it out and buy cover, protect yourself.
Buy cover, protect yourself.
Protect yourself.
Love it. Yeah.
No one's doing it for you. No one's going to protect you.
Yeah. Fair points. There we go. The puns just cannot be stopped today. I love it. Awesome. Well, listen, Brandon, Drew, I appreciate you guys coming on. Great conversation here. It's very refreshing to meet companies, people who are building companies who are feeling a need rather than just doing something for the sake of capitalism and for the sake of we just can. We can just drop this coin and extract. You guys are doing something a lot different. So I appreciate you guys coming in and dropping some knowledge on us and letting us know what you guys are building. So I appreciate you again. And for anyone who is listening, be sure to give them a follow. Right above our faces, if you are on X, you should be able to click their link and follow them. And if you are on YouTube, down below in the description, I have their site link. So you can go ahead and get started. Like they said, 1 minute sign up. You might as well get signed up. Even if you're not sure if you're going to use it or you want to do it in a few months or whatever, or a few weeks or days, at least get signed up and get that process going. Because like they were saying, you never need coverage until you need it. And then you're like, dude, 50 cents a day. And I didn't sign up. That would be brutal.
50 cents a day. Keeps the pain away.
Keeps the pain away. Let's get it. All right, everybody. I hope you all have an amazing rest of your day. Be sure to like and retweet this stream if you enjoyed it. I'll catch you guys all in the next one.
Thanks, Gabe. Later.
Okay.
Absolutely.